What's up everybody? Welcome to the Stocks channel. My name is Cory and today in the stock market we continue lower after the breakdown below the risk level and SPY is quickly approaching the next very critical support zone. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright. Today SPY was down 0.76%. After yesterday, when we broke down below 442, I told you this is where we need to start getting risk off and we need to start viewing this as a downtrend, which means it is possible the bull trend is rolling over and dying. And today we did continue lower, only validating that point that we need to start managing risk to the downside. And there's many ways to do that. The simplest way is just sit in cash and wait for the next critical support. And on SPY, I do believe below 442, we are likely getting lower highs and lower lows until we get to 430. Now, if we break 430, which is completely possible, we do have gaps to fill, and there is one right around 423. That is why I tell you, you need to be risk off, meaning you need to be expecting lower prices while we have this downtrend. To break the downtrend, we need to at least get back over the 50 EMA, but more than likely, we're going to need to see higher highs and higher lows and a break above 448. Now, if you're a swing trader and you don't mind catching a falling knife because you're holding for the very long term, do keep in mind I did this weekend technical analysis on the weekly chart of SPY, and my prediction for the finish of the year is that we pull back towards 430. Whether or not we go a little bit lower or we don't quite get there is pretty much irrelevant if you're long-term swing trading. And then I do think we're going to start on a path up towards 480. So if you go back, this was about 2 weekends ago when we had the first red candle, and I told you if we broke down below the first support trend line, we were likely on a path down towards 430. And as a longer term swing trader, if you are focusing on trying to capture more upside, that's the risk level you want to be paying attention to. Now, even in the short term, it's possible we bounce towards 450 and still go hit 430 later in the month or next month. So do keep in mind there could be plenty of volatility between 450 and 430. And of course, there's always the chance we go lower. This is just the projection. If we're going to stay in a bull trend on the weekly chart, this is what I would be focused on. And then also, I gave you a little bit of homework yesterday. I told you to watch two charts, the US 10-year yields and the XLF, because the US 10-year yield was starting to break the October 2022 highs. And if we zoom in, the first thing we started to see today was the 10-year yield continuing higher and breaking yesterday's high, which is obviously a bullish continuation pattern and more reason why the market was likely selling off today. Now, I will caution you when you're looking at 10-year yields, these are usually going to be associated with market bottoms once we get the pivot. So in the event you see the 10-year yield starting to crash down back towards the 20 simple moving average, that could be a very face-ripping rally in equities, which could lead to a strong 2 to 3 day bounce. Again, we need to see it in the price action to prove it's going to pivot because we're just now starting to get the breakout. There's no guarantee this breakout is going to hold. So as I've told you, watch this and then take action if you start to see it pivot. We are likely very close to a market bottom. And then jumping over to the XLF, I told you watch the 200 daily moving average, and today we did close below it. So again, these are warning signs that we could have more weakness under the surface and the stock market is about to start reacting to it, which could mean we're about to get high volume selling. And I told you, you do not want to be on the wrong side of high volume selling. So manage your risk below 442. I gave you 2 warning reasons why, looking at the US 10-year and the XLF. And keep in mind, even if we get a bounce all the way back up to fill this gap, it's possible that's just another lower high before we continue lower to make another lower low. So manage your risk is the message I'm trying to deliver. There's no reason to be overly bullish below SPY 442. And that is the risk level I chose. You can use any risk level you want. And if you've been risk off below 452, that's completely fine as well. Just make sure you understand, however you are trading this market, that you know exactly what you're going to do in either scenario, because you always need to be prepared for both scenarios. And there is still a bullish scenario that we finish near all-time highs later this year after this pullback is over. And then there's obviously a scenario where we continue lower and some kind of black swan event comes out and we continue back into some kind of bear market. Now, looking at the weekly chart, we still have a bullish trend above SPY 430. So again, that is the next critical support if we get down to that we want to watch very closely. So critical levels to pay attention to now will be 436 and 430. And in order to start getting more bullish, we're going to need to break out of this downtrend that we currently find ourselves in ever since we broke down below 442. So to break the downtrend currently, we need to break back above 448. Or we need to start seeing some type of reversal pattern of higher lows and higher highs and break back above 442. So be patient and manage your risk, and keep in mind, in a downtrend, that doesn't mean we can't bounce. We are very likely going to bounce at some point and test the breakdown, and then in a bearish scenario, we'll continue lower towards 430. So if we start to bounce, that doesn't guarantee the downtrend is over. It simply means we're looking for an opportunity to sell at resistance before we go to lower prices. until we see some type of bull breakout above some critical resistance and break out of this downtrend. So go draw up your trade plans now for either scenario, and that way when the time comes and the price action tells you which scenario is playing out, you're not going to be acting on any emotions, you'll simply be following your plan. On the Nasdaq 100 triple Qs, we were down 1.09% today, and again, risk off below 366 meant we were likely coming down towards 355 to 357, and we are very close to that support zone right now with today's close, and we are way outside the lower Bollinger Band as we approach that support. So just like SPY, there's a good chance we could bounce back up to the breakdown, and then if we continue to get rejected from a lower high, expect lower prices as we continue into this downtrend. It's much safer to assume lower highs until we can get back over that 50 EMA, reverse some of this negatively sloping moving averages, and see price action starting to break back above some of them, reversing the downtrend, telling us we're going higher. So watch that 366 level as some critical resistance, and this 355 to 357 support zone is going to be your next critical support. On the Dow Jones, we were down 0.78% today, and we sliced right through the 50 EMA and came all the way down to the next critical support zone right around 346 and closed about $1 below it, and we do have a gap to fill right around 343 and another gap to fill just above 339. So again, this is risk off behavior, which is exactly what I was talking about last night, and you need to manage your risk in the Dow Jones right here right around 346. In the Dow, to get more bullish, we're going to need to break back above the 350s, and a very simple level to follow is 353, or you could try to use this level right around 350. As I've continued to warn you, even if we bounce, it is possible it's a lower high before the next lower low, so don't get overly bullish when we bounce. That's going to be an opportunity to start managing risk to the downside and continue to expect lower prices until price action proves otherwise. On the Russell 2000 IWM ETF, we were down 1.18%, and again, risk off behavior below 188, and we're coming down towards the 200 daily moving average, so the next critical support is right here at 183. Below 183, we're breaking down with a bearish breakdown, which means we're likely going to fill gaps at 176 and 171. And again, even if we bounce, you're looking for lower high rejections between 188 and 190. On the ARKK ETF, we were down 2.42% today, continuing lower, and we're sitting right on top of this support zone right around $40 and the 200 moving average right around 39.4. If we break below the 200 moving average, you're looking for gap fills below at 36 and just above 31. On the VIX, we were up 6.74% today, coming back up to this resistance level right around 18, and this is where the VIX has typically been crushing lately, so it is possible we do get a VIX crush Friday and start heading back down towards 14. Which is exactly what you would expect to see if we're going to start bouncing. And as I've said before, we're going to need to see a pivot in that 10-year yield. So if we see the pivot, expect the VIX to crush and expect to see an impulsive bounce. On Bitcoin, we're currently down 3.7%, and Bitcoin is breaking down below that support at 28,000, and below 28,000, we're looking for support right around 27,000, and we're about $500 away. This is the rising 200 daily moving average, so I'm not bearish on Bitcoin. I'm simply saying this is where we could likely go if we continue to pull back. But if we can hold above the 200 daily moving average and hold the support trend line at 27,000, that could be a buying opportunity as we continue into the bull trend. Otherwise, Bitcoin is going to start looking more risk off below 27,000. On Tesla stock, we were down 2.83% today, and Tesla broke down below the support trend line, which was that buy zone of support between 225 and 230, which means we could be going down to 214, 208, and then 197 next. This is more of the falling knife scenario the longer we stay below 225, so manage your risk accordingly. Below 225, it is very possible we're going towards 208 to 197. So if you're already all in Tesla and you're not prepared for lower prices, you may need to rethink your position sizing. Above 230, we're starting to bounce, but that only means we're likely coming up towards 240 to 250. And if we can clear 250, then we'll start getting more bullish. On Apple stock, we were down 1.46% today, and Apple did close the gap at 175, and we did close just below that support at 174, and below 174, the next support zone is right around 171, and then the gap fill at 167. So yes, it is possible we continue lower, but I think in the short term, Apple is due for some kind of dead cat bounce towards 179 to 182. And then from there, we'll have to see if we get rejected from that negatively sloping 50 EMA and negatively sloping 20 simple moving average. And if we do, we'll be looking for the gap fill at 167. So jumping back over to the S&P 500, we are in that risk off territory below SPY 442. So manage risk accordingly. There is no reason to catch a falling knife and take on way too much risk. But if you are a longer term swing trader, pay attention to that critical support zone right around 430. But again, you need to manage your risk, and you need to be aware that falling knives can continue to fall, especially if we start to see high volume selling. And you do not want to be going long during high volume selling and trying to catch falling knives with no risk management. No matter what you're doing and how you're trading, it's always important to manage risk, whether you're shorting or longing or swinging or day trading. Risk management is the name of the game, and that is how you're going to become profitable. If you want to come crush this market, consider joining Bank Trade Alerts or the Stocks Channel Discord server. You can find out how to join either service by clicking on the links below. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.